This year, I'm going all in on safe moon rocket landing. It's the future of cryptocurrency. I'm just kidding, you know me. I'm all about diversification and taking calculated risk. And in this video, I'll be sharing exactly how I invest in 2022. Here's a quick recap of 2022 and the markets. Even though it's only March, a lot has already happened. Oil prices are the most expensive they've been since 2008. And there's even speculation that oil could reach over $200 a barrel. Wow, it's a good thing I bought all this vegetable oil at the supermarket. This is mainly due to the Russia and Ukraine war. Russia is one of the biggest producers of oil in the world, and some countries have blocked some of Russia's imports, therefore reducing the supply of oil and increasing the demand and also the prices. This has an obvious flow-on effect for petrol prices, which are now above $2 per litre where I live in Sydney, Australia. But that's not the only thing oil prices have an effect on. It could also push up the prices of food and travel as well, which means that our inflation rates could surge even higher. So you better follow me on TikTok. TikTok. Oh dear. So you better follow me on TikTok and Instagram to check out my money hacks. Speaking of inflation is currently at record highs in the US, and inflation rates are not too far behind here in Australia. The other day, Pablo and I were chatting to one of our friends from the US. His name is Gabe, and he has an amazing YouTube channel, by the way. And Gabe was telling us that inflation rates were getting so bad in the US that restaurant owners were actually crossing out the prices on the menu and then replacing the numbers in order to keep up with inflation. And they were doing this a lot more often than usual.
Hiya.
And this is the hiya, so expensive. Even though it's been 2 years since the start of the global lockdowns, we're still feeling the effects of the global pandemic, financially especially. Interest rates are also expected to gradually increase this year, which means that asset prices generally drop lower. And all of these factors combined means that there's a lot of volatility and fear currently in the market. In fact, when we look at this fear and greed index, we can see that the market is looking pretty fearful at the moment. So, what does this mean for us? I don't even know why I'm recording this video. I'm just kidding. Even though the news looks pretty bad right now, we have been through worse times, and it eventually did get better. Our stock and crypto portfolios have obviously dropped quite a bit because of all of these uncertainties. But in saying all of this, we are super lucky and grateful to be living in a country that does have peace. And we have our health, so there are definitely bigger things to worry about than our portfolios being down. Over the past few years, we've learned that it's really important to try and keep your cool and not panic. In the wise words of Warren Buffett, make sure you give this video a like and subscribe to this YouTube channel. I'm just kidding. What he actually said was be fearful when others are greedy and greedy when others are fearful. Pablo and I are long-term investors, and since we do have an emergency fund with cash savings there, that means that we don't need to dip into our investments and sell at a bad time in the markets. And we only invest money that we don't need to live. We know from previous years in the stock market that not every single year has a positive returns. Some years may have positive returns and some years may have negative returns. But overall, there are more positive years than negative years. And we know from the past 100 years, the S&P 500 has had an average annual return of 10% per year. And it has never had a crash it hasn't recovered from. This is how Pablo and I used to invest. Pablo, look, this stock has dropped by 10%.
Oh no, 10%. We need to sell to cut our losses.
Don't worry, the stop loss order has already been triggered.
A few moments later.
Damn, Pablo, the stock, it went back up. Should we buy it?
Yeah, of course, let's buy it.
A few years ago, we made a lot of irrational and emotional decisions by buying and selling and checking our portfolio daily. But in the last 2 years, we've decided to take on more of a passive approach with our investing. In fact, we haven't sold anything since June 2020. When we invest in something now, we want to make sure that we can hold on to that investment in good times and in bad times. Do you, Queenie and Pablo, agree to hold on to this ETF in good news and in bad news, in bull market and in bear market?
We do. Diamond hands.
Your order has been fulfilled. This is how we invest now. We automatically dollar cost average into a portfolio of ETFs no matter what the market is doing. I know it's boring, but it works for us. So this is the platform that we use to invest, and as you can see from this graph, we are dollar cost averaging into our portfolio of ETFs. And these are the ETFs that we automatically invest in. As you can see, it is quite diversified in a few different ETFs. Some people may prefer to have less ETFs in their portfolio, but Pablo and I prefer to have a few more. So we invest mostly in ETFs, but we still do have a few individual stocks on our watch list. The individual stocks that are currently on our watch list include Google, Apple, PayPal, Etsy, and AMD. To be honest, we haven't invested in individual stocks in quite a while because they used to be pretty overvalued, especially in the tech space. But since the market correction, some of these technology stocks have dropped quite a lot. So some of the stocks that are on our watch list are currently undervalued. Undervalued according to analysts anyway. So as you can see here on Simply Wall Street, which is a stock research tool that I use, I'm having a look at Alphabet, which is actually Google stock. And as we can see here in the valuation tab, it shows that it may actually be undervalued according to analyst predictions. And when you click on view data, it shows the way that Simply Wall Street has calculated the fair value of Google stock, which is a two-stage free cash flow to equity model. Investing in individual stocks is definitely more risky than investing in ETFs. But for context, only 5% of our net worth is invested in individual stocks, and 30% of our net worth is invested in ETFs. Okay, maybe you say you come into the picture from here or something. But I'm 25 and Pablo is 30.
Don't tell my age, Queenie. Stop saying my age. What?
I wasn't expecting
You asked me to do this.
Look at you. Ah, Pablo. So we have quite a long time frame to invest, so we can take on a bit of risk in our portfolio. And we prefer to invest in businesses that we can value rather than investing in NFTs or altcoins. But Queenie, everyone's saying the coin Safe Moon rocket landing is the future of cryptocurrency. Apparently, it's even better than Ethereum. Even though we think there's an opportunity in those areas, we don't know all that much because it's much easier for us to value businesses and also draw on real life experiences that we have with those businesses before we make a decision about whether or not we would like to invest in it. But of course, everybody's situations are different, everyone has different risk profiles and goals, so it is really important that you do your own research. We also have a small crypto allocation in our portfolio, but it is mostly invested in less volatile cryptocurrencies like Bitcoin and Ethereum. And we're not planning to sell our crypto. Our strategy is to simply dollar cost average into Bitcoin and Ethereum every month. Another thing to note is that we have actually decided to fix our mortgage interest rate because there has been a lot of talk about interest rates rising this year. So that's one of the reasons why we decided to do it, and we actually ended up saving around $90 per month because now we're on a fixed interest rate rather than a variable interest rate. Investing in our business. Pablo and I have also been investing more money into our business by hiring freelancers who can help us make our content better. And we've also been buying new equipment to make our content better. We've also invested in this AI Queenie bot that can actually record these videos instead of me having to do them. Queenie, have you finished recording this video yet? No, I'm almost done. She's overworking me, guys. We've also invested in a cleaner and meal kit delivery services to make our life admin easier. Pablo and I are so grateful for your support over the past 2 years, and we honestly couldn't do any of this without you. So thank you so much for supporting us by watching our videos, interacting with our content, liking, following, commenting, because it honestly means the world to us. And we love you guys. Investing in experiences. We've recently finished reading this book called Die with Zero, and it opened our mind to the concept of investing more money into life experiences. And some of these experiences we can only really enjoy while we're young. For example, traveling is a lot more enjoyable when you are young and healthy. So that's one of the reasons why we've decided to do a round the world trip from June to September. This will be the biggest trip that Pablo and I have ever gone on. Honestly, since I started working full-time when I was around 19-20, the most that I've ever taken off work has been around 2 weeks. So 3 months will be a really, really long time, and we are honestly so excited. So stay tuned for all of our round the world and travel content. We've realized that we're never going to be as young as we are right now. And as we age, our health also declines. The pandemic really made us realize that life can actually be shorter than we think it will be. So that's why it's important to do the things that we really want to do right now while we can, instead of always waiting for the future. We don't want to live like there's no tomorrow, but we also don't want to live like we're going to live forever. It's important to have a balance. We also invest in our health by going to the gym 5 days per week. It doesn't take that much time or money, but hopefully this will improve our life over the long term. If we miss a day or two of exercising, it doesn't matter a whole lot in the grand scheme of things. But if we don't exercise in 5 years, then this could have a big impact on our health. So that's why we're comfortable investing our time and money into our health. Yes? Thank you so much for telling us the secret code word, Pablo. So thank you so much for watching. Write us a comment below with the word big in it, just so we know who watched this video all the way through. We really appreciate you guys. See ya.
Thank you. See ya.
Bye.